years. Now, moving on what's brewing, Recur Club and InCred aim to help bridge the funding gap for early and mid-stage startups in India. Together, they said they would amplify quick debt financing solutions for high-growth companies and provide access to capital for founders. Now, debt financing is an alternative source of working capital, is gradually receiving wide acceptability, especially among growth-stage startups. The relevance of such alternative funding sources is now far more pertinent considering the so-called funding winter. Joining us now to discuss this further is Eklavya Gupta, the co-founder and CEO of Recur Club. Eklavya, thank you so much for taking time out and being with us on the show today. Talk to us about what you plan to do here. What kind of gap did you see here? So what sort of feedback did you receive, especially as you hope to help with debt for growth?
No, absolutely. So I think Recur and InCred have fostered this partnership to actually help finance early to mid-stage companies debt financing. I think last 2 years, 2021 to 2023, we saw funding winter where equity was fueled. Equity is starting to pick up, but valuations are still tight, and founders are looking for alternative forms of capital so that they do less dilution. Very important in debt, you will hear different kinds of debt being available today. Right, is that it is non-dilutive, but very important is that it should be transparent, right, and reliable for a founder to trust on, and it can help him grow to the next round or dilute less in the next round, right, and help them grow the business. So I think Recur and InCred are coming together to focus on seed stage, pre-series A, series A, and series B kind of transactions, where we'll focus on SaaS, tech services, D2C, B2B marketplaces, and EV companies primarily. These will be the 5 focus sectors that we categorically focus on and go deep in the ecosystem. I believe that is a great form of financing that founders are using very effectively these days to grow their business. Like at Recur, we have had founders who have grown their businesses 100% year on year just using debt, right? And now are diluting or taking equity at almost 2x the valuation.
Absolutely.
Or 50%, more than 50, less 50% dilution is saved there. So different use cases that founders use. And that is what our idea is, to keep a target of 300 crores in this year of 2024 with InCred. And more so, Recur Club plans to deploy more than 2,500 crores in this year, along with other partners as well.
Absolutely. So debt financing is gaining popularity, like you just pointed out. But if you could just, if you could delve into this a little bit deeper, how is this investment vehicle or initiative structured between Recur Club and InCred?
So there will be joint co-investment by InCred, and some participation by Recur. Recur is a fintech marketplace, so Recur doesn't have its own lending book, right? So there is a program that we have formed with InCred specifically to invest in these companies. There are certain set of parameters, like a company should have an annual revenue of at least 5 crores. A company should have a runway of at least 6 months, right? And a company should be growing. And should not have debt more than 30% of the annual revenue. As long as the company meets these 4 criteria, there is a programmatic form in which InCred will finance. Recur, using its technology underwriting platform, will enable those transactions and help them to get those transactions fast and also monitor those transactions. Because in startup, from an investor point of view, it's very important to be close to data and monitor those transactions well. And that is where Recur Club's, early warning signals and monitoring systems that we have developed in-house over the last 2.5 years are proving, worthwhile for marquee investors like InCred to actually, come and, believe in the systems and go big in a collective and a collaborative manner.
Right. So you said that you'll have earmarked about 300 crore rupees for this initiative, right? So talk to us about the kind of companies. You overall told us the sectors you're looking at, but if you could delve deeper into that and talk to us about the kind of companies that you're looking at and the priority sectors you mentioned, anything beyond that?
Absolutely. So I think other than sectors, I think the stage of the companies, we will want, as I was mentioning, companies between annual revenue of, say, 5 crores to 80 crores, 100 crores. I think that's the sweet spot of this program. While as Recur, we have started to do, late stage companies as well, which is Series B, Series C via the platform now. But this program with InCred will dedicatedly focus on, the companies in the pre-Series A, Series A kind of segments. The runway criteria would be around, the runway to be greater than 6 months for companies. And they should have, the annual, the debt to annual revenue should not be more than 30%. So I think these are 3 factors. As long as the company maintains that, we can help them get term sheets within 48 hours and help them finance within 7 days. I think that will be the USP.
Sure.
And be very transparent. One thing this program and as Recur, we endeavor, right, to be very transparent to companies so that they can rely on us for future roadmaps and clearly tell them, what is it that they get and act as true advisors to them, right? Like in true sense, because there are a lot of, other alternative platforms, fintech platforms that are coming up to provide debt. But I have realized and seen, not everyone is very transparent with the founders. And I think that's the need of the hour that Recur focuses on to be, because founders are putting in the hard-earned time, right?
So transparency is the need of the hour. But if you could tell us, you pointed out that SaaS, EV, those are the sectors that you're looking at. So what's exciting about these sectors? Anything beyond these as well?
So I think, as I mentioned, right, like SaaS, B2B marketplaces, D2C, EV, and, because these are sectors that are proving themselves. So to take on debt, it's very important to have some reliability and predictability in the underlying revenues, right? Like founders should not make a mistake when they have not achieved a product market fit and they go for debt. I think that is very harmful for them as an organization as well. So these sectors we have seen, we have underwritten at Recur. We have worked with close to 1,000 companies in these sectors over the last 2 years and built our financial models and our underwriting and monitoring mechanisms, which gives us the comfort, right, like to go deep. Also, I think if you see last 3-4 years, right, these have been the hot sectors in which we see a lot of startups coming up and doing very well, right?
Absolutely.
Like last 6 months, you've seen a lot of consumer startups gaining a lot of equity money, right? Like in this year itself, you will see the D2C market has been, very, very attractive for people. Last year was SaaS. We see some Gen AI coming in as well. So some innovative, predictable products. SaaS is always recurring revenue, right? Like, so it's very predictable. People should really use that there. EV, when I mentioned, EV requires, CapEx plus, some OpEx expenses, which should be funded by debt, right? Like equity should not be used to fund those kinds of expenses. And hence these 3 sectors categorically.
Right. And before we let you go, can you tell us about Recur Club's revenues? What are you clocking? And what are the targets for the year? What's profitability looking like?
So I think we have deployed, last year, as mentioned, we deployed about more than 1,000 crores last year. The idea is to actually do more than 2,500 crores by the platform this year. The focus early on used to be on pre-series A, seed stage kind of companies. Given that we have also matured as a platform, we are now focusing, obviously that remains the core, but we have started to fund, via the platform Series A, Series B, Series C startups as well, where we have multiple banks, multiple NBFCs, multiple credit funds on the platform who are enabling those transactions. So 2,500 crores of annual deployment, and margins vary somewhere between 2 to 5% depending on transaction to transaction. And, that's what we look like as our top lines growing almost 2.5x this year as compared to last year.
All right, Eklavya, thank you so much for joining us on the show today. We're completely out of time. But with that, Ritu, it's over to you.